If you incorrectly treat workers as independent contractors and the IRS determines they are employees, it could cost your business money in fines and penalties for underpayment of employment taxes. You should do the following if you want to hire contractors. Ensure that the business has a written agreement, example, independent contractor agreement, with its contractors, and that the agreement describes the scope of the work to be performed, the compensation paid, the timing of the work, and clearly define the independent contractor's tax obligations. Ensure that the contractor has liability insurance, particularly if that contractor is a professional. Ensure that the contractor who is a professional has his or her license and that such license is current. Ensure that the contractor has a current business license from the city or county in which he or she is operating. Do not set contractors' work hours. Do not provide the contractor with tools, equipment, software, or supplies with which to perform his or her work. Do not provide the contractor any benefits which the business provides to its employees. Do not retain or terminate or attempt to retain or terminate assistants or employees of the contractor. Ensure that the contractor submits invoices for his or her work. The IRS has stake in identifying the misclassification of employees because it typically results in lost tax revenue. IRS looks at a number of factors to see if the employer controls the services the worker performs. If it does, then the worker is an employee, not an independent contractor. According to the IRS, the facts that provide evidence of the degree of control and independence fall into three categories. Does the company control or have the right to control the worker as well as how the worker does his or her job? For example, if a company provides training for the worker, this signals an expectation to follow company guidelines and therefore indicates that the worker is likely an employee. Are the business aspect of the worker's job controlled by the payer? These include things like how the worker is paid, whether expenses are reimbursed, who provides tools, supplies, etc. Only an independent contractor can realize a profit or incur a financial loss from his or her work. Are there written contracts or employee-type benefits? Example, pension plan, insurance, vacation pay. Will the relationship continue, and is the work a key aspect of the business? The issue of who has the right to control is often not clear-cut, and the tax code does not define employee. Businesses must weigh all these factors when determining whether a worker is an employee or independent contractor. If you aren't sure if you're correctly treating workers as independent contractors, or if you want to contest your treatment as independent contractors, you can ask the IRS by submitting IRS Form SS-8, Determination of Employee Work Status for purpose of federal employment taxes and income tax withholding. The form takes you through a series of questions about your relationship with the workers. The IRS reviews the situation and issues a determination. Let's say Company X has some workers that they consider independent contractors. For 2 years, the company didn't withhold federal income taxes from these workers, and it didn't deduct FICA taxes, Social Security and Medicare tax. The IRS came to the company and determined that the workers should have been treated as employees. Since no FICA taxes were withheld for that 2-year period, the company would be liable for those payments, plus fines and penalties. There is one exception to this rule. A federal loophole known as the Section 530 Safe Harbor provision allows a business to avoid paying employment taxes if the business treated workers as contractors, but the IRS says they are employees. Section 530 established a safe harbor for employers. This means that a business may not be liable for those employment taxes. If the business can show it had a reasonable basis for treating workers as independent contractors, the taxes, fines, and penalties may be waived. About 40% of unpaid taxes and penalties cannot be assessed because of Section 530 restrictions. It lists 3 requirements for receiving a safe harbor exemption. All 3 must be present. 1. Reasonable basis. Your business must have a reasonable basis for not treating workers as employees. These reasonable bases might be established by related court cases or rulings by the IRS. A previous IRS audit that included an examination of employment taxes at a time when you treated similar workers as contractors and which did not result in IRS reclassification of these workers. You can show that a significant segment of your industry treated similar workers as independent contractors. You relied on some other reasonable basis, like the advice of a business attorney or accountant who knew the facts about your business. Substantive consistency. In addition, employers must have treated the workers and any similar workers only as independent contractors. If you treated similar workers as employees, this relief is not available. 3. Reporting consistency. Finally, your business must at all times have filed all federal tax returns consistent with your treatment of the workers as independent contractors and not employees. This treatment would include giving the workers Form 1099 miscellaneous as annual wage summaries and not at any time W-2s. Relief is not available for any year and for any workers for whom you did not file the required information returns. To continue the example above, the company X can show that treating the workers as independent contractors was an industry standard, treated all similar workers as independent contractors, and it consistently prepared 1099 miscellaneous forms each year for all the workers in this case. The IRS says that an SS-8 review is not connected to a Section 530 evaluation. These are 2 separate processes. The IRS assumes a worker is an employee unless the employer can prove otherwise. The IRS closely monitors businesses to be sure they are not misclassifying workers as independent contractors instead of employees. Employers must therefore be especially cautious in determining whether a worker is an employee versus a contractor. The IRS has a checklist of 20 factors. Bear in mind that these factors are only a guide for determining whether or not a worker is an employee. Can the worker make a profit or suffer a loss as a result of the work? Does the worker have an investment in the equipment and facilities used to do the work? The greater the investment, the more likely independent contractor status will be found. Does the worker perform services for more than one client at a time? Does the worker offer services to the general public? Does the business have the right to give the worker instructions about when, where, and how to perform the services? Does the business train the worker to do the job in a particular manner? Are the worker services so important to the business that those services have become a necessary part of the business? Does the business hire, supervise, and pay the workers assistants or staff? Does the business require that the worker provide the services personally, or may the services be delegated to someone else? Does the business set the work hours, or is the worker the master of his or her own time? Is there an ongoing relationship between the worker and the business? Must the worker perform the services on the premises of the business, or does the business control the route or location where the services are performed? Does the businesses have the right to control and determine the order in which services are performed? Is the worker required to submit reports accounting for the worker's actions? Is the worker paid by the hours, day, week, or month as opposed to being paid by the job or on commission? Is the worker reimbursed for expenses for business or travel costs? Is the worker provided by the business with the equipment, tools, and/or materials necessary to perform the services? May the business fire the worker at any time? Is the individual required to work full-time for your company? Does the individual limit the availability of his services to the general public? The IRS Small Business and Self-Employed Tax Center provides a multitude of resources for small businesses as well as self-employed independent contractors. In addition, the Voluntary Classification Settlement Program, VCSP, offers certain eligible businesses the option to reclassify their workers as employees with partial relief from federal employment taxes. Well, I hope this helps in determining how to classify your workers, and if you like this video, please subscribe and give me a thumbs up.